the things that well, my team and myself, is not only about one person, wanted to do. We were in a way with our hands tied because of the regulation, which to me is the main player to be blamed. Why banks are not more, in a way, flexible, more into so oriented into be more of assistance to small and medium-sized companies, and this is actually where understanding should come. Why different public support programs actually everywhere, whether this is United European Union, similar thing in United States, the region where we partly participate, which is Southeastern Europe or Western Balkans, whatever you call it. So everybody is thinking, well, assisting SMEs has to do with providing them some finance, because it's been a paradigm that SMEs do have a certain obstacles to gain finance. This is an old story I've been tackling in different roles I was holding for the last 20 or so years. So SME finance is an endless story. In preparing this presentation, I was actually browsing some old materials, and I found an interesting presentation from 1998, which I could actually just, change a couple of numbers and sell it today, because 22 years ago, for events, conferences, projects like this, we were addressing exactly the same questions, and which is this is how one should enable more access to finance to SMEs, and in SME sector, even more to be focused on entrepreneurial startups. To me, all the startups are not really entrepreneurial. The definitions are very broad, but later on I'll try to distinguish between entrepreneurship and self-employment, because these two things are kind of overlapped, but they're not, to me, exactly the same. So yes, SME finance, an endless story, and the kind of overview for let's say the last 20 years did not change much, except the last two bullets, which are in a way new. They've been around, maybe crowdfunding for 10 years, probably less, and deals with cryptocurrencies or ICOs, which were in a way very popular and attracted a lot of media coverage, were starting to take place 4 or 5 years ago, and they kind of turned down a little bit for different reasons. I purposely put the public support on the top. Why? Because projects like you have it, all kind of ideas how to assist SMEs by securing them different sources of finance for different stages or different purposes. It ends up in whether there would be public support available or not. And in a way, I was asked by Andras when approached when are we doing this presentation to say something about what banks are doing. And the sad thing is that actually what banks in Slovenia are doing with SMEs is pretty much linked to public support. So the in a way solo actions by the banks are very rare, and for companies which are very young, they're relatively non-existing. And now being in the bank for a couple of years, I understand why is this so. It's not that because bankers would be whatever that nasty in their character, not to love these lovely small beautiful SMEs. It is regulation that is grabbing the throat of banks, and they cannot do more. So and maybe understanding this will reduce a little bit the criticism which is present for the bankers all over the world. There's several jokes which are similar to jokes on lawyers. So lawyers and bankers do share similar jokes about, being without heart and stuff like this, no emotions, just cold decision making on the risk and so on and so forth. So that's basically it. I'll go quickly through the public support which is available in Slovenia. There is a whole bunch of this, and as I have in red 3 lines, which is public support banks. At the moment, I'm not sure why I painted red also leasing and factoring. Well, I am sure these are 2 sources of financing which are mostly done by banks at the present in Slovenia. Say they would be offered in a way as a part of banking services. And coming back to whether they are appropriate for really young companies, the process of approval and the basis of the risk assessment for getting leasing or factoring or whatever other financing is pretty much closed because bankers are doing it. So leasing and factoring in this type of discussion actually do not deserve much of the particular attention. So I'll go to public support in overlap with what banks are doing. We do have quite some public support in Slovenia, and I'm sure everybody from the European Union would be able to share this kind of basket of different services, different institutions, and so on. We have this so-called spot system, which is generally managed by the agency called Spirit. This is public agency. By the way, many years ago, I used to work for the agency that was called differently, but it was basically Spirit. It's not only that I worked for, but let me show off a little bit. I was the deputy director for 5 years. So a lot of this, what is now in their kind of offer on their menu, is pretty much again the same story as it was 15 years ago. So we haven't actually progressed much. On the other hand, this is not criticism. If I would put in spot and to tell them what I would do now, being so smart, I wouldn't have much more ideas on what should be done. On the other hand, all this public support has always been actually missing some kind of proper evaluation, which would answer the question, the main question, the question of all questions, which is what public support really contributes to growth of SMEs, to growing number of SMEs, to more jobs created in SMEs, to their contribution to GDP of a certain economy, and so on and so forth. So it's hard to say, and it's hard to measure, to be honest. It's been an ongoing discussion for many years, how you measure the impacts of the public support programs. So in the end of the day, what somebody said at a conference like this one years ago, the guy said, well, in a way, you have to be a believer that that we need SMEs actually, and that they would not be able to do everything on their own. So there is a need to support them. So we have this spirit as an agency which does not do directly financial support, but we have another institution which is actually working closely, and they are actually subordinated to the same ministry, which is Ministry of Economy, and this is now painted in red. It is Slovene Enterprise Fund who does the financial incentives, and there are some grant schemes, which is okay. There are some kind of equity and quasi-equity schemes, and there are also loans which are available through SME through Slovene Enterprise Funds, and these are loans for SMEs. In this point, I need to stop because this is the first point where public support actually meets the commercial finance. So all these loans provided by Slovene Enterprise Funds, they're actually not loans that would be provided from their own funds, but they're loans which are provided by commercial banks, but are somehow backed by Slovene Enterprise Fund. And these backups are in a way of two types, and there are products which are combined. One is that the interest rate is subsidized, and the second one is that Slovene Enterprise Fund would provide a certain level of guarantee for securing loans which are approved by banks. So what does this mean in practical life? SMEs who do not have other collateral to provide to secure loans, they may use this incentive from Slovene Enterprise Fund. Of course, they have to apply for it. There are calls published on regular basis, and if successful, then Slovene Enterprise Fund can provide guarantee for the bank loan in the case of default. Now, what is the downside of this mechanism, which looks good, is that basically the administrative procedure people have to go through is in a way doubled. So first, they need to have a conditional approval from the bank, and conditional approval from the bank is nothing but the whole procedure which the bank runs for credit risk assessment and everything else, knowing that the applicant will apply also for the Slovene Enterprise Fund guarantee scheme. So once such a loan is conditionally approved, a bank issues a note, a kind of letter saying, well, under the conditions of the Slovene Enterprise Fund, we are ready to approve this loan. Now, with this letter and a bunch of other documentation, which is not that simple, and there is plenty of room for all kind of consultants who claim they're good in providing applications, in making, helping with providing applications. They apply and they wait, and the whole procedure takes for me too long. It can take a month, even half of the year, because before the loan is approved on two levels. And then we have this budgetary logics, which means that all has to be done in 1 year. So if applicants grab to this project too late, the decision may fall in the next year. Next year means new budget, new plan for Slovene Enterprise Fund. So it is better than nothing, but it is not a very flexible instrument. And you can all imagine having probably a quite extensive experience with EU bureaucracy. That's double bureaucracy. So bank as a bureaucratic institution, and EU as another bureaucratic institution, because funding of enterprise fund is mostly from regional development funds. So you put this on the top, and you have doubled bureaucracy, if not squared. That's the big issue. So we have something not that flexible, and in several cases, banks would, in a way, because it is easier for them, would prefer approving finance if it is not too large. So they would go into certain risk without assistance of Slovene Enterprise Fund, because what is procedure? The other, which I forgot to mention, is that Slovene Enterprise Fund, they start the scheme by signing contracts with banks. And in these contracts, banks are limited with the interest rates that they charge to the applicants, and this interest rate is by Slovene Enterprise Fund. It is negotiated with banks to be as low as possible. So in a way, banks, it happens over and over again. Banks can in a way charge higher interest rates on the market, rather through guarantee schemes like Slovene Enterprise Funds. We have a couple of others which are local, but they work pretty much the same way. So what happens in the end of the day, banks go into the game with Slovene Enterprise Fund more because of, that's a channel of maybe getting new clients rather than having a real opportunity for good investments of low risk. So that's something which is not really good. I believe if this is a joint project and it's meant to be so, banks should be more interested and more motivated to actually also allocate more of their own funds. And these funds, they are from deposits of the people and companies, and they were motivated to input more money into schemes like this. But as I said, it is simply not happening. The other loan provider we have as a public support is called SID, or SID Bank, as we call it. SID Bank is not really a bank. So it is not a bank in the sense that they collect deposits on one side and lend this money to borrowers on the other side. SID Bank is a kind of development bank here in Slovenia, and they provide, they secure their sources not from deposits but from government sources. They borrow some money from wholesalers, around Europe, from ECB, from certain funds, and they provide certain lines of finance to companies. The funny, or in a way unusual thing here is that they are regulated as a bank. So on the lending side, they have to follow all the risk assessment procedures as they are obliged for banks. So they do not take any additional risk. So in the way, on the asset side, they are bank. On the liability side, they're not bank. And but what they do is they offer more favorable conditions, speaking about the price or the interest rate, which in the end of the day, it turns out that this state-owned, state or publicly funded bank, which is not a bank, under the same condition, performs an unfair or unloyal competition to the commercial banks, which is rather unfair and truly brings certain mass to the market. Fortunately, they're not that big that they would reach more than a couple of percent of the market share in Slovenia, but still they are a kind of market interrupter. I would skip this. I brought this presentation from somewhere. There's several incentives, and Spirit is doing a lot of soft support. And when these presentations are done, there are always millions listed as a numbers. So in 2019, Slovenia spent a couple of tens of millions euros on the direct SME support, which, whether this is okay or not, I wouldn't go into this. Now we come to banks. 2 slides of theory. What banks expect from a loan applicant, and this is every loan applicant. There are 5 C's, as it says here, is character, capacity, capital, collateral, and conditions. If we browse through this, what is the most important is probably the character of the entrepreneur. What we did back in loan is that we were maybe a little bit more flexible, but our let's say risk assessment procedure involved a very in-depth interview with the main people of the company. We took that time, and it was really an exam, a pitch that these entrepreneurs or teams need to do in order that we would assess them whether they really have this character or passion, if you like, that they would make what they were promising in the business plan. So this is probably the most important. If you feel that the person is the right one and is able to lead the team and manage the whole business plan, then this is kind of first tick in the assessment. Then a bank always needs to check the capacity, cash flow. What we do here, and all the banks do, is basically they more rely on the historical data rather than the business plan, because historical data is something that was achieved, and business plan is a pigeon on the roof, right? So a general belief is that historical data is more reliable to assess the possible future, which for me is the nonsense. But this risk assessment procedure are also, to a certain extent, defined by regulators. So bankers as such cannot do too much about this. Then we have capital structure of the business. So the capital strength, is the company capitally adequate? What are the ratios and so much? So the companies which are not that much capitally or equity strong, they, because of the cold financial rules of leverage or gearing, they cannot take on too much debt. Then we have a collateral for which the banks, with which the bank secures itself for possible default. That's something which is interesting. The banks still, after all these years, they prefer real estate collateral. Real estate collateral is even in a way defined as the best possible collateral in the regulation guidelines. And what is even more interesting, or in a way it is contradictory, banks, even for commercial loans or for loans for companies, they prefer to have a housing collateral, and they even stimulate this. So if I remember my teaching days, I was speaking a lot to entrepreneurs. The mantra at that time has always been, well, take care of yourself, of your family. You need to be somewhere, and what is business is business. You know, it may gone, but you may get it back. But providing your home as a collateral is something that needs a very deep consideration. And now we have regulation that stimulates this. And to me, something is not wrong. And this is, again, is not only Slovene regulation. A lot of this stuff comes from European Central Bank and European banking authorities. And last but not least, there are conditions in which the business operates. So banks should really see all of this. What happened in the last, in a way, couple of years, maybe last decade, is that banks suffer from decrease of their profitability. There are several reasons for this. One of the reasons is a world and in a European Union and the banking system was heavily struck 10, 12 years ago when we had this last big recession. There were huge bailouts. Banks needed to be assisted by the governments with the billions of money poured in order to keep the financial system as healthy as possible. And then what followed was a extremely tough regulation, which is getting tougher and tougher on all levels of banking, of running a bank. But what is most important is the capital adequacy demand. If Basel II started for 8% of capital adequacy, now most banks in European Union have to follow the double of that 8%, which is almost 16. What this means in practical terms is that for the same amount of equity, banks can lend out half of that loan portfolio or an investment than they could 10 years ago. And you're all aware that equity is expensive, so banks are simply less profitable. And in that case, they provide less returns for their shareholders, which means that they're also less attractive for new investment. How this results is that and startups are hurt by this even more than established companies. There are higher impairment rates due to low ratings. All new companies in Slovenia, we use this ABCDE rating, where E is actually funeral, D is very bad condition, C is something where everybody starts. All startups, all new companies are C rated, and C rating means automatically 10% impairment for every loan which is granted for C rated company. So in other words, bank loses 10% in impairments in the moment when they approve the loan, which is far too much. If the bank wants to, chase a certain level of profitability. Then there are high capital adequacy ponder. This is cost number 2 for the bank, and higher than established companies. And the third thing, it is quite often mentioned in the SME finance literature. Why don't SMEs help themselves more with card overdrafts and stuff? Even for cards, banks that issue these cards are fully liable for possible default. So big guys like Master, Visa, and others, they basically have no risk with the SMEs because all the risk burden is transferred to banks. Then if SMEs don't have any physical collateral, banks may go into the game with the schemes like Slovene Enterprise Fund, which makes the whole thing again less profitable. And as the last one, I mentioned this already. For all this, to great extent, needs to be blamed regulators in Slovenia, our national bank, which is following the rules of ECB and EBA. I understand them. They want to make the banking system waterproof, and they want to protect the depositors on the other side. But there should be a dialogue in that direction if this institution want to be a part of something which is very important in the economic growth, to my belief, which is helping SMEs. Today, even SMEs have troubles with provision of payment services by the bank. This is another story which was brought in again from the regulator. Many SMEs do have problems in even opening bank accounts. The procedure of opening bank accounts for companies is getting tougher and tougher. I'm sometimes say as a half of joke that there's almost a business plan needed for a simple account opening. There are restrictions to several industries in which you can find several companies which may not exactly be dealing or trading in this industry, but they are just providing some services for this industry, and they may be on the blacklists of the companies. And all of this is because of anti-money laundering and anti-financial terrorism precautions, which brings additional burden and responsibility to banks' workload. And this is why banks simply don't want to do it, because it does not pay off. So what would be solutions for bank participation? Well, in a way, working together with public schemes, that's generally good, but the public schemes, once designed, they do not, once in the process of design, they usually they do not cooperate with banks. They put together their frames of reference. They may communicate it to EU, to the funding institution, but they do not communicate it to the one that should help to implement this. This is why we have a lot of troubles with this. In Slovenia, I didn't mention this, besides Slovene Enterprise Fund, we have another fund, which is called Slovene Regional Fund. It is focused slightly to different target groups, but it's pretty much similar story. And we have some local funds and schemes. There should be alternatives. What we implemented back in my bank was that we prepared a kind of plan, kind of career plan for the new company that would, started working with us. And we said, okay, we may open you an account. And if you're doing well, if you're a good student in a way, for 3 to 6 months, you can apply for a business card. And this, well, is a one step further. And once you are good with the business card, you may apply for an overdraft on your bank account. So we did this with a kind of plan, and we promised in a way in advance. If you're a good customer, we will do this for you. And it played quite well with the clients. On the other hand, if someone, there's a lot of work for our side, you need people who should become experts or should become good in understanding the peculiarities of SMEs. On the other hand, the new institutions now coming out, so-called payment institutions and e-money institutions, which are in a way taking a part of the banking market. So just to summarize, entrepreneurship is risky. Self-employment, which I distinguish a little bit, which is mostly based on some previous experience, on the character, is by banks less risky. But startups with wannabe, and I'm not joking, because also as bankers, we see a lot of ideas which are, more for science fiction books or movies rather than serious business, and they want the loan to finance it. And they simply don't go through with bankers because bankers are familiar. They're not stupid, and they're familiar with the statistics that whatever 50% or whatever SMEs fail, startups fail within the first year. Where we are now, well, definitely this green or whatever his color is, Monster, is a impacting these questions as well. Banks are pulling back even more, and it's needless to discuss a lot what will be new normality and stuff like this. I'm not too optimistic that something would change in the near future. As I said, the 1999 study I was holding in my hands a couple of days ago was addressing exactly the same question. So maybe even here, kind of new setup should appear, and we should see. Fortunately, evolution theory says that always somebody survives, right? And this will be with the banks, with the SMEs, and everybody else in this story. So thank you, and I'm of course open and ready for some Q&A session. Thank you.